Okay, everyone, welcome back. Today we are going to be looking into our usual analysis. Since I did not post last week, now I'm giving you update, and one of the reasons is that the market did not move towards our direction that previous week. But just yesterday we had CPI, and that was very bearish for the dollar, and we had this boost on Euro USD. Now I told you guys about this liquidity above this high, and you see how they ran through it to this top up to this fair value gap. This was a very strong move throughout yesterday, and majority of traders who were trying to sell the Euro USD end up in massive loss. So let me give you a quick recap about my previous analysis on this, which I told you that this was my low and I'm expecting price to drop into this scan zone, but price did not drop into that level, although we had some touch on the moving average, but that was not what it tends to follow. I was waiting for price to drop into this low, maybe take out the sell side liquidity, but price ignore all that and price start to pump, and I was not trading fundamental analysis, so I missed out those entry. Although this was an order block, but I ignore it because it is too big. I don't trade big order block. That's something I usually avoid. Now in today's analysis, we're back to the DSY, and we are going to be looking from the daily. Now on the daily, it is really funny because we are still bearish. Yes, we are still bearish, and we just hit some little liquidity below this area here, and that is not the target for we are targeting maybe below this area here, because a lot of liquidity will be resting just below this order block. And you can see this is an untouched order block, and also but this one has been touched because we have this close move here. I told you about, if you have this close move in the order block, know that other block has been used already. Usually we should expect price to bounce a little bit from this order block here, this daily order block. And if I bring my Fibonacci tool, you know that this is a very important tool when it comes to SMC trading. So we should expect price to travel into this area again to give us a good entry. It is not compulsory, it's just to give us a good entry. Now you can see that on Euro USD we did not get that retracement, but here we had it to the 50% equilibrium level, and price starts to drop from that level. So if we can get the same here again, and we have just only one order block on the daily, but going to the 4-hour, here we have some series of bullish block here, and these are very strong to push price downward, but price will likely bounce off this level into at least 50% of the previous move, or maybe 100%, because this is one thing you need to understand about CPI, but that is a whole analysis on its own, so I'm not going to jump into fundamental on this. So if we have price into this level, into the area there where we love to enter again, and we expect some sort of bearish move that will lead price below and retest this level. Now price, it is very important for price to retest a mitigation block or another block, and once we have this retest, that will push price into this area even below, but we are going to see that happen. And if price did not do that, we are going to see another move, which is price dropping, just continue this move, but this time test this area and drop. Now why is this area very important? Because that is an order block there, but once price break it into, it will become a mitigation block, and price will usually mitigate the block before moving forward to create a lower low. Now if we go to what we are trading, this is what we are trading. Now in this area here, we need to be very careful, because we have this big liquidity void here. You can also see the same thing. Now we are going to see something like DSY, but the opposite, because this is going to be very bullish at this point. If the DSY is bearish or continue that bearish momentum, we can see price hit this higher. You can see that is a liquidity zone there, and many of the traders who are shorting or selling right now, they will have stops around this area, and you can see that's a very old high. So a lot of liquidity will just be resting at there, and this is like 76 days high, so we have a lot of liquidity just resting above that area. So if price continue running upward without retracing to this level, it will be very risky for late entry, because it may trigger a bearish move, which we can see price below this area slowly. But as price continue the upward momentum, we should also practice risk management. And remember, I'm not a financial advisor, and also hopefully we get that retracement. If we get that, we trade it, and if we do not, we miss out again, and maybe we might get a trade around, maybe we might get a trade from next week. But until now, I can't really tell, because the market is not trading in my zone, and I only enter trade once the market is in my zone.